So were former Atlanta Fed President Dennis Lockhart and Bill Lee, former senior economist at the New York Fed and former head of North American economics at Citigroup. All right, gentlemen. It was almost as if they were both talking about the same thing at the same time, just as President Trump was outlining how these tax cuts will affect the middle class in a very salubrious way. I will begin with you, Dennis. Janet Yellen was saying that she expected tax cuts would be stimulative as well. Are you in agreement with all of that, and what jumped out at you?
Well, I'm not surprised with the interpretation that Janet Yellen presented. I do think clearly the tax cut will be stimulative, but I think she said modestly so, and I think at the moment that's the best way to think of it. On the margin, the tax cuts will provide a little bit of stimulus, and according to the summary of economic projections that came out of the committee today, most of the members factored a little bit of stimulus into their projections for 2018 and 2019 growth. Mm-hmm.
Bill, what she did say that caught our eye was that even with the tax plan, if it does go through, and it sure looks like it will, even with that, she said that 4% growth GDP, which the president has said many times, but also recently I remember him saying 4, 5, maybe even 6%, that kind of GDP number will still be challenging to reach. You don't see it getting to 4% even?
4% is going to be a tough hurdle, but it's not impossible. You know why? Because you need a total change in the attitude of businesses. They're going to have to accept the supply side benefits of the tax cut and really produce more productive investments. And one way to do that is to invest in technology and essentially boost what economists call multi-factor productivity. You know, the FOMC has also built in some supply side response in the sense that even though we get 0.5% boost in growth next year, we don't get any change in inflation, which means that even though it's more stimulative, it does not provoke the Fed to aggressively tighten because the inflation projection remains unchanged.
Dennis, a lot of people don't like inflation. They like lower prices, but we're not going to see much movement when it comes to higher prices. I don't know, maybe you see it, if we don't have wage growth. And she was very clear, we're not really seeing that, and this has stretched out more. And this transitory fancy word, it really means temporary. This has not been temporary. Wages have not ballooned higher like many people expected or would like to see them do. What's going to stimulate that?
Well, she did point out that in previous years, what economists might call the output gap was big enough that it was understandable that wages weren't responding. But now we're at an advanced point in the recovery, and you would expect with the tightness of the labor market, and anecdotally we hear that from so many business people, it's hard to find good candidates, that you would expect to see some wage growth. And if we don't see accelerating wage growth, then there is something going on that I believe economists don't fully understand. And 2018 is really going to be a key year to evaluate whether we understand the way the economy is working in terms of wages and inflation or not.
Bill, we got one more question here, and I really was interested to hear what one person during the Janet Yellen news conference asked of her that I would be so interested to hear. I'm sure President Trump would disagree, but this person asked, do you foresee that this is not exactly the right time to be cutting taxes when the economy is actually doing better?
I think the right answer to that question was this is exactly the right time to cut taxes if we need to boost the income of those people who have been left behind. And that's what President Trump was trying to say. A lot of the job growth has been in the low-wage sectors, and low-wage sectors are paying extraordinarily high taxes under the old tax scheme. And now with the change in the tax plan, those low-wage income earners are able to keep more of their wages. So in that sense, it's exactly the right time. And the proof in the pudding is the Fed has not raised its inflation forecast. And if we could boost productivity, we'll get some real wage increases. And that's exactly the generic idea behind the tax reform as opposed to tax stimulus.